Hey, what is up, everyone? It is November 13th, and I hit a big goal. Just went over $20,000 yesterday. So the goal was to have it hopefully by the end of the year. And let me just show you here for confirmation. There we go for it. This is my AMP statement. AMP's the broker I use. They send everyone who trades a statement at the end of the day, letting them know what all your transactions were and stuff. But anyways, as you see right here, new cash balance 20,226, and down here is just whatever trades you have open when the day closes and whatever you have closed. So that's why it's a little different. It's 19,692 margin that I can use because I was in some trades when this closed. But this is my total cash balance in the account. So yeah, hit it, and excited about it because mainly reason why I'm excited is because I finally stuck to my trading plan. The way I trade is more of a swing trading style. So we're starting off with the Nasdaq right here, and let me just show you. And actually, let me also get on. There we go. There's that. And so what this is right here using this ABCD trade. One of the ways that I've went and changed up a couple of the setups is now I use inside pitchfork, which with a longer entry point. The 4.236 is what we're looking for. Plus, I can also use the Andrews pitchfork, but that's not for this setup right here. It's ABCD setup. I got rid of the shift pitchfork. I just didn't like it. It still was working, and in fact, I just got out of a trade the other day from it. But I think the inside pitchfork and use the Andrews pitchfork, it just provides better signals than the shift pitchfork does in conjunction with my Fibonacci retracement levels. And with the Fibonacci retracement levels, the first entry you can get in for the way I trade here is 23.6, but I've stopped getting in for that one when that one signals. The main reason why is because when price goes against you quite a bit, then the best you can do is just a slight loss right up here. So we'll miss out on some trades, where it comes down, hits 23.6, and then goes right up and hits the 1.146. But I think overall, this other way will be a whole lot more profitable because then I can get an extra contract at a way better location down here for it. So this is just one of the trades right there. All we're looking for, we put the inside pitchfork on there's first A point, B point, C point, put on right there. So then when price either touches the blue line right here, it has to touch it, or close above it, below it. That gets us in the trade, because if it went down here, continue to go down from like right here, close down right there, or touched it first, then we'd be looking for a short using the top of that, but it didn't. It went the other way, so we're looking for a long. So we draw the Fibonacci retracement level from the lowest low to the high, and then we wait. So the first one is the 23.6 right there, where it got hit. But again, I'm not taking that trade anymore. There's the 50. So then when it hits the 50, the hard exit is a 23.6 level. So it's going to be the bottom of that box I put on there just to make it easier to see. And I always have my exit slightly below the hard exit for it, because there hasn't been times price gotten super close to it, good enough to say that it's gotten hit, but didn't quite hit it. So that's why I'm always a little bit lower than the exit, or higher than the exit, depending on if it's long or short. But anyways, see, it hit the 50. That was my first entry. Had another entry down here at the 1.146, and now that's just the average of those two, and wait for it to go up here at the 302. If price goes all the way down here, there you see I have my next entry way down here. The Nasdaq has the highest margin for it, so I try to only trade 3 contracts, 4 at the most, because the price does go all the way like down here. I'll get in down here for it, but that's all I do for the Nasdaq right there. Going on for the SP 500, it's currently, this is a really long trade, it's been in right here, using the ABC trade. I guess I can get rid of that. I don't need that one on there. Move some of this over. Actually, I don't need that. Alright, this is a note for myself. So it started off way down here, went up to the 2.618, 4.336. Didn't quite hit the 6.5, but what it looks like right now, price is in this level is going to be in goodness gracious, I can't talk. It's in consolidation right now. You can see right here we had, like, we just take that to that, drag it over to about right where some that fits, right? Yeah, it looks pretty good between this and that right there. We have that trend channel up, and now it's broken out of that, and now it's making around similar highs and lows. So somewhere all over here. There we go, support resistance. This is hitting in the the resistance level right here. We're consolidating all in this area right here. So then from there, from consolidation, two things can happen. Price can continue its uptrend going up, or it can go down. And so we're looking for at least a slight move down to get out and hit this trade right here. Another reason why I also like shorting the S&P 500 market, because I actually bought some put options. I think they expire in late December. Where's the SPY? Here we go. And let me show you the reason why. So what we have down here as well is another ABC trade, ABCD trade using the red sim for is ABCD right there. So we put the inside pitchfork on ABC. Now, as you can see down here, price not only hit the blue line down there, but also closed below it. So that signals that we need to look for a retracement going short because we're expecting more downside. And instead of that, price rose up to the 23.6 to the 50, and then this was, I believe, after the election day. Yeah, you know, we had this huge gap up right here, and then we have another little gap right here. So with price being way extended out over there, I figured it was a good time to look for a short, especially with this big gap right in here and the SPY opening market for it. So eventually that will come down and get hit. I mean, look at over here. There's a big move down right here. And then within a couple days, of course, it can take sometimes more and longer than a couple days for it to go hit. But with a couple days, it was hitting up against it, and then bam, just blew past it and created a new gap right here. So I think I have for my put in it, I think I have it. I think I bought some like 585 puts or something like that. I can't remember. And I think it just has to break down in here somewhere for it to be in really nice profit for it. So bought it long enough out, you know, close to 2 months out from it. So looking for some eventual weakness in the SPY market, which is also the S&P 500 market as well. So that's what we're looking for there. And then Russell 2000, there were some early trades today, but nothing else really to go over. Nothing right now. Just have to see what happens the rest of the day. Here's an ABCD trade setup right here, but we need price to either come down and hit this green line or close below it to look for a short trade. And what happens is as well, you see we have this big move down here. This kind of makes it really weird, so probably won't be able to get a trade off of this one right here, because eventually if price does come back down and say it hits or closes right there, well, it still is in that move right there. So this move probably will be said and done for it, looking like that, because it's already going to be at the 50%. So that's still one thing I'm looking at, is price is already in a trade by the time it hits the entry signal. You just go along with what's already been done, and therefore would have been done because it hit the 50 and obviously would hit the 23.6. But we'll see about that. So really, probably the better setup would be using the inside pitchfork for it. But let's see. Okay, we already did that today. Yeah, see. Price closed above it right there, so we went looking for a long setup pullback. Didn't get in at 23.6, got in at the 50, and then price came back up and hit it up over here. So that is that. And then let's see here. Yeah, nothing going on. This is our trade earlier today from the ABCD trade setup. So that one's done. We are said and done with that. Well, what we used for it, I believe, was that setup. ABCD, yeah, that's what we used for it right there. So let's see what we can use, if we can use the inside pitchfork for it. Let's see what that looks like. No, it was inside pitchfork. That is what we used for it. Yeah, for sure. So let's see with Andrew's pitchfork what it would look like if there's a potential trade for it. So here we have price came back down, hit it down here. So let's see what this looks like. So there's that, there's that. Here we have that. Yeah, you know what? This is looking like a good short right here as well. So let's go ahead and get in that trade. Because as you can see, here's the A, here's the B, here's the C, here's the D point for it. Because when price came back down there, it hit the green line right there. It didn't close below it, but you know, obviously hit the mess out of it right there. And that was the low of the move. So then we put the Fibonacci retracement levels on it. And then, you know, within the same move, it closed back up 23.6 up to the 50, then has it come back down and hit the 23.6 level. So let's put that box on there to signify that's the target area we're looking for. And it's moving down a little bit. There we go. We're in it. Now let's go down here. And there we go. There's the exit we're looking for, just under $90. And then for this one, since I'm in so good right here, if price does continue to go up, I'll put another entry at the 261.8, another one at the 4.236. So I think actually what I am going to do, so what would that put me at 1, 2, 3, and the fourth one would be up there. I'm thinking about putting one up here if price continues to go up, but we'll see. As of right now, we'll just leave it there, right there. And so that's the Dow Jones. Now for oil, I'm looking for a longer move up. Let's see, do we get 23.6 hit down here? Oops, this thing's all messed up. Here we go. There's you. There you hit it, closed it. We do have a close below it. Nope, not enough to signify it, so keep going up. So here we go. So we do have an entry. The exit's going to be up here at the 1.146 level. But as I mentioned earlier, I don't get in at the 23.6 level anymore. So we'll just move all of these exits up over here. And our entries, there's an entry just right at the 50, an entry just above the 1.146. I have any others on here? I don't have any others yet for it. So we'll just see if we can get there's a movement down here. Going down right here to the 50, then the exit moves up to the just above the 23.6 level. So yeah, those are all the markets right there that I'm doing. You know, like I said, hit the 20K mark, so excited about that. I think what I'm going to start doing now that I hit it is I'm going to start taking money out slowly. Is after every month, you know, I'm going to have a set goal. So say something like $50 a day, just something extremely manageable. And then so that's about $1,000 a month. So anything over that, I may start taking out, but I may actually bump up that target for what I'm looking for, because I do want to start taking out some money to enjoy it, buying some things for it, and of course, you know, putting money aside to pay for the taxes that's gonna have to pay for as well. But I just have to see what I want to do, because I haven't gotten up this high before. Years ago when I was trading the Forex market, I got up to close to 20K. I think it's about 18,000 or so, and then I just blew it all, trying to get way too aggressive Forex. I felt like every month I had to keep making more and more and more money rather than just taking what the market was giving me. So this time I want to keep, you know, it's obviously following my plan, but enjoying some of that hard work I put into it over the years, and finally start pulling out a little money and you know, just enjoying a little bit. But anyways, that's that for now. I'll have another video here. If I hit maybe 25,000 before the end of the year, which it would be a stretch, then I'll probably make another video for it. But yeah, no, that's other than that. So this has been by far the best year I've ever had for it, and so we're just going to keep on, you know, trading that way moving into 2025. All right, thanks. Bye.